passage of the stablecoin legislation drafted by the Senate, dubbed the Genius Act.
Because analysts say a wave of competition could complicate things.
Stablecoin issuer debut right here at the NASDAQ today.
Stablecoins are fundamentally a tool to improve the speed and efficiency of the global economy. And because of this, we see stablecoins operating successfully across a variety of different countries and throughout a variety of different use cases. So I think it's really important to talk to the people who work in stablecoins with that global use case and across many, many different use cases. So with that being said, Brigitta, welcome to the show. Really, really excited to have you. Let's just kick things off. I'd love to, hear more about you and your background. I know you have a pretty unique background yourself. And then also let's talk a little bit about Tenity and what they do.
Thanks a lot, Dante. And I'm also very excited to be here. My name is Brigitta, and actually I'm coming from Switzerland. I spent more than 12 years in digitalization and innovation in finance, originally as a wealth manager, which obviously being in Switzerland, in Zurich, is also quite common. So I'm coming from the industry. And I have changed basically side 3 years ago when I joined Tenity. I'm a hub director of the Swiss unit. And Tenity is quite an interesting ecosystem builder and VC-led fintech innovation hub, which has grown out of the Swiss Stock Exchange. So it's kind of an interesting setup as well. We have been in the market over 10 years, and we are connecting the different financial institutions, banks, asset managers, wealth managers, also insurance companies, and making sure that they are also up to date what's going on in financial technology, what are the latest innovations, and very importantly, that we are continuously scanning the market. What is actually new? What are the startups that are building, especially early stage startups? So also we are looking at pre-seed, pre-revenue startups as well around the globe, and creating and curating also the insights. One side for our own funds, our investment funds, but also for our corporate partners and innovation partners, which we have globally more than 65 companies we are working together. So I think we are in a very unique position in that sense in the market to see what is really going on and to help our primarily traditional finance companies as well to move ahead and making sure that they also taking advantage of the latest innovation space in financial technology.
I love that. And obviously you guys have been around for quite some time. I imagine you haven't always been working with stablecoins. Why did Tenity decide to start implementing stablecoins, and how has it sort of impacted the way that you guys and your partners and your portfolio companies are doing business?
Yeah, it's also kind of a very interesting question, because in 2022, we obviously looked into that space quite significantly with some of our partners. And then there was a crypto winter. So there was a lot of the investments which is actually going in that space has slowed down, at least from the TradFi space. So there was quite a lot of critique in the market that it's only speculation, that there is nothing really behind. It doesn't really solve any real problem for the industry. And I think this type of, let's say, thinking has started to shift. It started actually feel the shift beginning of last year, like 2025. And there was also some major players, and I have to say, kind of in the United States, are moving into that space. And then we got the news about the IPO of Circle, which is obviously one of the biggest stablecoin issuer in the United States, or Stripe buying Bridge. So it's also kind of integrating basically for more traditional payment rails, also the stablecoin technology. And then we also saw the increase in the transaction volume in stablecoins. And interestingly, one of the other part was that earlier in 2020, 2022, as I mentioned, we did looked at, and we did invest in some early stage startups who were building technologies for market making in a decentralized finance space. They were very early stage, so this was more for us like a signaling. But then by 2025, we started to see that the transaction volume and the liquidity, which was kind of increasing on these platforms. So again, I think there was a lot of different signaling coming together for us. And then we approached basically our bigger partners and suggested that, okay, we have to look into that space. So we started first, what we do a lot is kind of education, closed door roundtables, discussions, like really being a bridge builder to put it on a table that do we see a particular use case? What kind of use cases we could actually also imagine, for example, in the Swiss financial markets? How is the regulators are approaching stable coins? And this was also one of the bigger push because the Swiss Financial Regulatory Authority has been also kind of revising their basically framework. So it was also kind of a signal that this space is going to move faster in the future.
Mm-hmm, mm-hmm. And so walk me through like the type of use cases that you most often see, because Tenity works with asset managers, you work with young startups, you work across all of these different types of businesses. Is there a specific use case that you guys see that's being adopted more than most amongst, your stablecoin work?
Mm-hmm. It's also kind of a very important point because how we approached also in terms of the use cases, we kind of looked at in the industry, where do we see the biggest friction points with the current infrastructure today? And one of the things came out, and maybe this is also because we are very strongly connected with the Swiss Stock Exchange, and the Swiss Stock Exchange has also different business units. They are also providing infrastructure services for banks and financial institutions in Switzerland. And one of the cases which we kept hearing is the cross-border payment space. Obviously, today it's quite lengthy. It takes a couple of days basically to sending. I'm talking about also big volumes for multinational companies, which also have like big treasury operations. It takes a couple of days. There are a couple of corresponding banks within that. It can be also quite costly, basically, to send this money. And then on the top of it, you also have different currencies, especially if you're operating in a multinational environment. The FX, it's also one of the aspects. So how you can actually make it more efficient, obviously faster, cheaper, but also on the side, programmable. So meaning that you can also build certain rules within how you actually move in the money from one country to the next.
Yeah, let's pause there. Can you talk more about that programmable money, right? Because I think that's a something that people talk about a lot with stablecoins, but you're the one who's actually using it. Tell me more about what it means to have programmable money.
Yeah. So let's take an example, which I think many of the companies, not only in Switzerland but in worldwide, especially if you have operation across the globe, is facing. You want to move money, but maybe you also want to move goods. So trade finance is also kind of a very great example for talking about programmable money. Because what is happening in trade finance? You have basically the buyer and the seller, and then the goods are moving across different jurisdictions as well. Very difficult also to track. And in that sense, many corresponding banks, bank guarantees are obviously involved. Now, if you work and if you utilize the stablecoin rails and smart contracts, which is actually enabling that you can create some rules. For example, you can say like you can actually start a payment or initiate a payment once there is a proof that the good has arrived, for example, in a certain port. Or you can actually define different rules, which is then triggering payment. You can also split payment to different parties. And all of this is actually happening automatically without somebody needs to reconcile. And this is also on chain. So it's very transparent, is auditable, it's traceable. Obviously, it's kind of reducing the need to have a lot of different counterparties in between. Some of the, obviously, the corresponding banks, the intermediaries, which is obviously charging like hefty fees, plus also the speed. I mean, if you are, for example, a producer in the agriculture space and you want to sell your products, it's very important as well when you're going to get the payment. What is going to be settled? How long do you need to actually wait? What kind of 100,000 of documentations, maybe I'm exaggerating a little bit, you need to actually also hand in. And it all can be basically creating a much more effective infrastructure, a much more effective basically technology behind, so that you can it also enables, for example, for smaller companies or smaller trades to actually go through, because until now the cost was just so high, so it can be also limited the possibility of, for example, international trade. So this is what I mean when the money is programmable, so that you can really build in this very specific rules, and it really helps you to make sure that it's also compliant, it's traceable, is transparent. If the rule doesn't basically it ensures basically that the transaction only settles when these specific rules are enforced.
That's awesome. So other than the programmable money aspect that you just mentioned, what advantages do most of your clients get out of stablecoins that other people who are not using stablecoins can't see?
Yes. I think the other area which is really huge, and of course for our banking partners and especially also asset managers, this is one of the most, I would say, exciting part, is that we all heard about, obviously, the decentralized finance. We all heard about the yields which you can also earn in the decentralized finance platforms. However, this is unattainable for regulated financial services, because obviously regulators, they see also in certain ways that you cannot ensure that the transaction can be traceable. You don't know who is behind. In the financial terms, we are always obviously worried about KYC, know your client, KYT, also the travel rules, understanding where is the money came from, where is it heading to, who is actually also in between, which regulated financial institutions, they need to ensure. Now, there is the whole wide world of decentralized finance, and then there is a traditional finance. And more clients of the traditional finance, they are asking, how can we also benefit? How can we earn more yield? How can we actually tap into this alternative asset class which is being built? And today the answers are still very limited. So another area where stablecoins can also help, and the rail which is also being built, that it ensures that this compliance is inherently built into the money, into the stable coins, almost like as a compliance wrapper. So you can almost imagine that a token or like a banknote, which know exactly who has been holding it, how it has been passed across, ensure that there is a proper audit trail, a log, so that you can also fulfill your regulatory requirements towards your kind of local financial regulator. Plus, maybe on the top of it, which is also something which we were looking into during the projects and and when we talked about the use cases, that obviously we also have to think about different jurisdictions. So to be able to tap into the world of DeFi, obviously it doesn't really know any borders. Now, financial institutions are regulated by different jurisdictions. So a Swiss bank obviously can operate in Switzerland. It has a banking license in different countries, but then their jurisdiction is basically applicable for them. Now, if you can build such a wrapper and put it on the stablecoin rail, it also understands the different regulatory requirements in the jurisdiction. So you can also avoid, for example, as a bank, that, I don't know, your banking license is revoked because you are not following. I mean, these are obviously very important threats which any compliance and risk department in a regulated financial industry is definitely worried about, or kind of keeping them up at night.
Yeah, it's interesting. I mean, I think if I may summarize, and you tell me if I'm getting anything wrong here, you mentioned that stablecoins are faster for cross-border payment. They have massive efficiency gains for areas like trade financing and things like that. You can earn yield off of money that's not just sitting there, but also money in motion, right? You have all of these different advantages that you just very eloquently outlined. Why do you see people not using stablecoins, right? Obviously, not every single financial institution in the world is using stablecoins. Not every single asset manager is using stablecoins. Not every single trade financing company is using stablecoins. What do you think is holding people back? Are they scared? Do they just not have the knowledge? I mean, you work with people to make this stablecoin transition every day, so I'm curious to your thoughts.
It's the last mile. Often we talk about the last mile, which means that there are still, even though the stablecoin infrastructure is being built and there is a lot of investment is going into there. However, when it really, and it's obviously very efficient, and we see all the pros why somebody should actually use and utilize stablecoins. However, the core banking system of any banks, which we know has been often built 30, 40 years ago. And the two kind of the technologies, they're not necessarily compatible. So the interoperability between obviously the on-chain finance, which is being built, and the traditional finance, it's still a huge hurdle in the industry. And I think it is also, first of all, obviously, it's education for the leadership to kind of differentiate the crypto industry, which is for them often very speculative, very retail oriented, and stablecoin, which they need to kind of think about stablecoin as a payment and settlement technology, not as a speculative investment. And I think, first of all, this mental change needs to happen in people's mind. That's why we are also obviously curating such basically programs and initiatives. And secondly, because there are still some infrastructure questions which need to be solved.
Tell me more about those infrastructure problems that need to be solved.
Yes, like how do you on and off ramp stable coins? So currently, companies and banks, they're still doing a lot of like workarounds. So they might able to receive obviously stable coins, but then they kind of instantly like off ramp, they turn them into fiat kind of currencies. And this is already, the efficiency, like you're already kind of losing part of the efficiency. And afterwards, you kind of like have to on-ramp again. So you're not able to take the full benefits of utilizing the kind of the stablecoin infrastructure. What it needs to happen, and very interestingly, also some of the projects we are working on, is to building these connectors, which we also call it almost as a USB plugin for banks. So they already have, for example, for cross-border payment, they have a certain kind of banking messaging tools which we are using, obviously, which has been built kind of many years ago, not with the thinking that it has to be once, connected to a stablecoin rail. But now we have actually startups who are working together, who are actually building these connectors. So banks can also take an advantage of it. This is still in a sandbox environment. Obviously, this needs to be, the tech stack also needs to be scalable. It needs to be proven, making sure that there is no kind of risk attached. But this is what I'm talking about when it's basically the last mile to really fully connect the banks without them needing to spend, the fortune to be able to kind of connect it to the stable coin rails. And there are obviously companies who will be specialized on that. I'm really positive. And I think also generally kind of let's say the application layers and the protocols, they really need to think about it. And sorry, maybe just to kind of add something to it, which is I find quite fascinating as well, that like 2-3 years ago, the narrative of, let's say, the crypto industry will be, we're going to replace all the traditional finance. We're going to get rid of all the intermediaries. We don't really need this kind of industry. And now this has actually changed in a way that we still believe that they're going to have kind of a utility in the space. So let's see how we can actually connect the two words. And let's also spend kind of time and projects, which is maybe not very sexy, but it's absolutely necessary that these kind of technological connections are being built.
Yeah. I think, it's interesting for me to see which types of companies and which types of financial institutions and asset managers are making this jump into stablecoins. To your point, I still think a lot of them think of any asset on the blockchain as an investment tool rather than as a tool for, the acceleration of money or the accumulation of money. You and your background, you came from the traditional space, right? You came from traditional financial institutions and traditional financial management, and now you're leading the charge on stablecoins. Tell me about that journey and sort of what needed to happen for you to go all in on stablecoins and really become, this tremendous evangelist and advocate and believer that you are today.
I think it's a really kind of long story, and it's actually already started back in 2017 and 18. And I think the first wave was really the kind of a blockchain revolution. And I think what has happened, and also being here in Switzerland, I don't know if everybody knows, but the majority of the layer ones are originated from Switzerland, and often their kind of a legal representation is in Switzerland. I think there are more than 12 layer ones. Also, the Crypto Valley Association has been created in Switzerland. So in very early, we get, even being in the traditional financial space as a wealth manager, we have been exposed to these ideas of what kind of blockchain can all do. We didn't really see the direct utility per se, and it was very far-fetched back then to, for example, offer our clients access to crypto investment. This was also a decision of the bank. I have been working that we officially were not able to offer any trade advice and any advice around basically crypto. But we have been watching the space also very closely. And for me, my journey was that I decided to become a mentor for early stage startups, joining actually Tenity first as a mentor, because I could see what they are building. I could also understand maybe what kind of use cases they are looking at it. and see that would that be something relevant for a bank I'm working on. And exactly that time, I had the possibility to actually set up a digital lab in private banking for international private clients. So we have been, and together with my team, we have been covering more than 82 different countries. So we had to worry about all the cross-border implications for 82 different countries, which is actually very mind-blowing. Setting up cross-border rules and in the digitalization process, when you go through even just onboarding clients, it became very complicated. Doing the know your client, know your business, understanding the beneficiary owners across multiple jurisdictions, extreme undertake. And I always thought that there should be a better way of also doing that. And there was obviously several waves of innovation and technological, basically innovation had to happen until this point. And I was always very bullish, not on a speculative part of the cryptos, but actually on the infrastructure part, because I saw a lot of pain points and basically friction points which we have been facing, especially when I changed the side to be an advisor to actually build digital products for a bank in this very complex regulatory environment. And I thought also during the crypto winter in 2022, and when I joined Tenity and also launched the first Web3 programs with some of the biggest wealth managers here in Switzerland, we were kind of very bullish, but then the market turned. So I think it was more kind of building a new momentum and taking also the learnings out of this crypto winter, what has led to that, and how can we actually differentiate really the space from speculation to a more kind of robust, really infrastructure focused kind of project. So this is a little bit my personal story, how I got here.
I appreciate that. We probably should have led with that, but I think that some of the big insights there is that, this change happened for you over many, many years, and it started, 8 years ago, something like that, right? 8, 9 years ago. And so this process takes a while. And I think that for a lot of these larger institutions, you can't just, turn on a switch and start using stablecoins in one day, right? That's not how it works for anyone. And I think a lot of the times it takes really, really dedicated partners like Tenity to have that long-term focus to be able to go in there and say, okay, what's step one? What's step two? How do we do this in a compliant, a scalable, and a durable way? What does that process usually look like? Like, you have gone into many, many different companies, startups, large institutions, and said, hey, we're going to help you with your stablecoin strategy. We're going to help you implement stablecoins. What does that usually look like to take a traditional financial institution, and then, get them involved in stablecoins? Can you walk us through that?
Mm-hmm. Yeah, no, absolutely. I think very important first is obviously what you mentioned as well. It's kind of a process. So it's a trust building process as well. Often this, already starting kind of much earlier in the process. So what we try to do kind of as a step one, obviously getting the signals from the market. So when we feel a very strong signal at Tenity, based on all the work which we do with our different partners, with our startups, with our basically continuous market trend monitoring, then we create a thesis around that. And then often we actually set up a much more kind of intimate, closed door setting where we are inviting as well from the ecosystem, like relevant decision makers, in a kind of a diverse group. So we make sure that we have representatives from tier 1, tier 2 banks, from asset managers, but then also the infrastructure providers. And often we also try to kind of curate in a way that we bring in startups as well, you're already building. And then within this kind of closed door setting, we discuss basically kind of a critical topics which we see. We also kind of pick their brain. We also understand what are their pain points, their needs. And we come out of these sessions with like a concrete proposal. What we really like to do is to set up almost like kind of a consortium of partners, because I always believe, especially now with the stable coins, that it's a whole ecosystem and infrastructure. One bank, one asset manager, we are not gonna change it. They are not building basically the rails. They need to kind of attach them to the rails. So you have to have the whole ecosystem participating, and this is also what we have done with our stablecoin initiative here in Switzerland. We had more than 9 partners in this consortium, so we made sure that we have banks also who has like an openness, and we can build a sandbox environment together. We have relevant layer 1. Very important, so that we can also build the use cases on the platform. We have a stablecoin issuer as well, so we have all this knowledge. And then on the other hand, we have the more traditional infrastructure providers, like, for example, SIX, there's a Swiss Stock Exchange in our case. We have as well other maybe tier 2 banks who would like to, and asset managers who would like to learn. Maybe they're more joining the consortium as kind of ecosystem partners, as explorers, because they are not that bullish yet. They are more kind of followers, but you give them access. And then you bring in basically the kind of compliance layers, the data layers, like the different kind of application layers as well, who is necessary to make this infrastructure also work. And then you define the challenges which you want to solve. And I think this is important, that this is also aligned. Everybody sees the value of it. And the next part is you have to bring in the builders. Often, actually, these companies are already existing. We have a huge network of startups we are already working together with. And in this case, of course, it can be come from Web3 builder network, but often we also have startups in a fintech space who are primarily on Web2, but they are actually increasingly merging into also in a new technological space, but they bring a lot of knowledge. This time we managed to bring together more than 115 teams building at the same time, which is a huge number. So we got more than 115 project submissions, use cases, really working prototypes, which of course also gave us like a tremendous insights of how we might gonna solve some of these issues I also mentioned before, and we could also showcase it to our partners. So in that sense, also, let's say like more conservative, slower moving partners who actually joined the consortium, they could be showcased what is able to be built. And that's the next step, and it's very important, is the experimentation part. So you also need to kind of create a space that you can, in a very safe environment, basically in a compliance awareness in your mind, create basically these sandboxes where the different parties from the consortium, they can also join, they can test, they can also get the proof points. And then once you see that, okay, this technology is here to stay, then you can also basically scale it. And the very, special angle of Tenity, as I mentioned in the very beginning of this call, that we are a VC-led innovation platform. So if we see a project which is very promising, a startup, we also have the possibility and the capability to channel capital into these startups. So we can also make our early bets and help them also to grow and scale. So this is a real live market validation which is happening with a very, very, very limited risk for financial service providers and players in the market. So I think this is I feel like that this is a right way to move, and this can be also a rather fast process. It doesn't have to take you, I don't know, years. It takes you pretty much like a couple of weeks, even to bring a building community together, to run certain projects, to also evaluate and then basically initiate proof of concept pilots in the sandbox environment.
Awesome. I love that. And one of my last questions for you is on sort of the venture side. You, I imagine, get exposed to a lot of really awesome startups and a lot of really great founders. What is really exciting for you right now from a solution standpoint? What do you see that you're like, okay, this is really going to change the way in which financial institutions interact with stablecoins and the world of on-chain finance?
I think coming back a little bit, some of those use cases which I already mentioned before, I'm obviously very bullish about bringing asset management on chain. I think there is a huge opportunity. Tokenization of real world assets, also assets in the commodity space, for example, trade receivables, obviously real estate. It's going to increase and it's going to create massive new opportunities also for asset managers. So building so also kind of startups and companies who can take an advantage, and often they already come from that space and take an advantage of the infrastructures which is going to be built. I feel like that there is a lot of opportunity. So we are definitely looking at that space right now.
Awesome. I love it. And my last question for you, and I like to ask this of a lot of the guests on the show, is, let's say that I am a traditional asset manager. I've worked in traditional finance for 20, 30, 40 years, whatever it might be. Why should I take stablecoins seriously, and how do I get started?
Maybe to how get started. A very great opportunity is also joining relevant events and conferences. Why? Because this is also where not only the evangelist of the stablecoins, actually, I don't necessarily call myself as an evangelist. I really believe on technology and real life use cases. So
but I think you evangelize that. Short, like I say that as a term of endearment.
Yeah. But I think it's really a great opportunity for anybody who's in this space and would like to kind of educate themselves and to also see real life use cases, to join this type of conferences, exchange also with builders, exchange with startups, because I think they have a lot of inspiration and to understand what is being built in the space, it's actually important. Secondly, I think many countries as well, like for example, like in Switzerland, we are Tenity, there are such let's say innovation labs, innovation platforms as well, where just focused on fintech primarily. I think it's very important that you really understand in the space. Having an exchange, I think it really brings a lot of value. Also because you know what are your kind of white or blind spots as well. Also understanding what your peers are doing. I think it's very, very also exciting. Even if you are a smart follower, I think you need to understand a bit of a speed of a change. Where would you need to kind of like jump in? What are the opportunities? And what are others are doing in your industry?
Yeah, love it. Love it. That's a fantastic way to close the show. Brigitta, thank you so much for taking the time today to chat. For our audience members, if you want to chat with Tenity or have more questions that you want Brigitta to answer, you can meet her and the Tenity team at Stableconomia in the next few weeks. Please do not forget to follow our show on whatever platform you're listening on. Be sure to keep tabs on Stable Pulse because we are going to start releasing new episodes with aggression. And as always, stay stable.